traders at Access Bank say that they expect bond investors to continue cherry-picking due to the lack of high-yielding investment alternatives in the market. For the T-bill side, there are increased offers on the long run of the curve, and particularly the August to September tenors. Odinaka Linus-Nwokonkwo, the Treasury Team Member at Access Bank, joins me now for a look at the markets this week. Thank you so much for your time today, Odinaka. Let's get your take on what we're seeing play out in the market this week. First, on liquidity expectations, I understand some inflows are coming in, but still a drop in the ocean, you say?
So remember that last week we were coming from over 300 billion on repo, and this week due to some coupon payments that we've seen, especially on the 2024 bond, 2026 and 2036 and 2026 7 bonds, we saw about 132 billion coming this week. So that has reduced the repo levels to about 41 billion. So we saw average OBB and overnight close at 14.63 and 15.4% levels.
Yeah, but what's your take on bond yields going into the week then?
Bond yields currently, I think, is going to be sticky for now, despite we see the demand. Remember that last auction it closed at 16.25 on the highest, which is the highest we've seen this year, especially on the long end, and currently it's trading at 16%. I still expect it to trade at 16% this week, owing to lack of any strong liquidity levels coming in.
Yeah, because we're still seeing that volatility play out in the market then. But any respite on the Q4 bond auction calendar?
The market still wait for that. Maybe it could come in next week. Until then, market is kind of very calm, and that calendar would determine the borrowing need of the federal government and how desperate they are to finally wrap up for the year.
Yeah, because we're talking about the federal government, your take on the performance of the Eurobonds, and how long do you think these bearish sentiments will continue to last?
What you see on the Nigerian Eurobond, we continue to see that bullish sentiment, especially yesterday. I gained at least about $2. The reason you could see the increase in oil prices, which could be a very significant play out. And also when you look at what's happening in the Fed is trying to hold stance on their hawkish stance in this today's meeting that will play out. So that could signal that investors would kind of be willing to take up higher yields in the emerging markets, and Nigeria is one of the destinations to go to.
Yeah, because when you look at bond yields at the moment and you also look at what's playing out with inflation, how are investors then gauging the opportunity here in the Nigerian market then?
Well, the bond yield and inflation are not at par. There's a negative real return. Bond yield at 16, inflation at 25. That's some loss in value. However, what we've seen play out is mainly local investors are the ones in the fixed income market space. So while the offshore investors are not yet here, reason is because they feel that there is not yet a comfortable yield for them to re-enter the market, considering where the inflation is. So I still expect similar sentiment to persist. Local investors like pension and asset managers have no other place to invest except the local debt market.
Because now next week we are going to have the MPC meetings. We have a new nominee for central bank governor. What are you calling for this decision in that regard next week?
Next week, pending when the central bank governor appointment is approved by the Senate, I still expect the current central bank governor to chair that meeting. I will say that they will go through a hawkish stance, maybe very minor, 25 bips hike, considering that inflation has moved by 172 bips to 25.8. However, I also have the opinion that the rise in MPR over the months have not really translated into reining in inflation, which they've also started using other tools to manage this inflationary pressure. So at best, I would say 25 bips increase.
But finally, as we wrap up, looking at the whole of the third quarter and how the market has played out, though, what's your take on the performance? One word.
Can you repeat that, please?
I just want a one-word answer on how you gauge how the market performed in the third quarter.
In the third quarter, what we saw was overall bearish sentiment. You could see investors were likely trying to fly to safety. In the local markets, I would say more of the investments were tilted towards the equities market. So we started seeing sell-offs in the bond market, which is why bond yields kind of surged. If you could remember the two auctions preceding this, we were at 14.3. Now we're at 16.25, which it's a very signal that the market took a bearish undertone and sell-off accordingly.
All right, I wanted a one-word answer, but that was actually way more than the sentence already. Thank you so much, Odinaka Linus-Nwokonkwo there, the Treasury Team Member at Access Bank.